asset number 4 we want to talk about is real estate. So we're going to compare and contrast. You inherit some real estate from a loved one, you hang on to it, versus if you inherit the real estate and you sell it right away. So here's the setup for what we're going to do. We've got Patty. Patty inherits Grandpa's house. Here's some facts that you need to know about Grandpa's house. Grandpa Joe purchased the house at $100,000. He purchased the house March 15th of 1980. Grandpa died August 1st of 2024. The fair market value of the house is $500,000. Patty inherited this house. So let's say, Loren, first, you've got our first scenario. Patty, are you doing sells quickly, sells right away, or hangs on to it?
She's gonna sell as soon as she can.
Okay, so she sells as soon as she can. What does that look like?
Yeah, so what this looks like is Patty, a lot of times will have to clear the contents of the house. So many times they'll have an estate sale or just move stuff out of the house. Yeah. And then she has to, the estate has to be ready for her to take ownership and then sell it. So let's just say a year after Grandpa Joe passed, she decides to sell it. The market value over that year did appreciate. So it went up from $500,000 to $510,000. So she might think she has a little bit of tax on that appreciation. However, we can consider the selling costs associated with selling that house. Let's just call it a conservative $20,000, which now means she does not have a gain. So in essence, she will be able to sell that house for whatever she sells it for, call it the $510,000, and not have to pay any capital gains tax on that sale.
Okay, and then what happens, Clint, if she waits to sell the house?
Yeah, what if she decides that she wants to keep it around a little bit longer, just kind of can't make a decision, and then over that time period, let's call it 6 years, let's say that home value, that market value goes up from $500,000, which it was when her grandpa passed away, it now goes up to $700,000. Well, you could see that she's going to owe some tax on the capital gains within that, and she can still deduct some of those closing and different costs to repair to get the home ready for sale. So she's going to be able to have $170,000 that she shows for capital gains. That will be taxed at 15%. So she will have a $25,000 500 tax bill that she will have to pay on the gain of that home that is appreciated in value over the 6 years from when her grandpa passed to when she decided that she was going to sell it.
So she could pay somewhat, you said $25,000 in capital gains tax?
Correct.
Okay, so as people, if they inherit a house, someone watching says, hey, my parents have a lake home, I'm set to inherit it. How do people decide whether they sell right away or hold?
Well, there could be some sentimental value, especially a lake home. Maybe they've been going up to that house many summers and they want to hang on to it. Maybe they want their kids to experience that same type of thing. There's a lot of reasons emotional reasons somebody might want to hang on to it. From a financial standpoint, one of the strategies that they can incorporate in your example, Clint, where they do hang on to it, in this case 6 years, is they can convert that to their primary residence. And now, once they go to sell it, as long as they've lived in it for 2 out of the last 5 years, they can, based on their filing status, married or single, not pay taxes on $250,000 up to $500,000 of that gain. And that could be one reason why Patty decided to hang on to it. She wanted to actually move to Grandpa Joe's lake house for a couple years, experience the lake full time, and then she can sell it virtually tax-free.
And is the takeaway, if you know that it's a home you don't want to live in, to try to sell it in less than a year, then as opposed to hanging on to it for more than a year?
With so many of these decisions that somebody has when they receive an inheritance, that's where your plan really starts to come in to full view. You know, does that fit within the lifestyle portion of your retirement plan? How does that look from an income perspective? Do you want to try to rent it out and make money on it? From a tax perspective, how does that fit? So these are all decisions that you just want to make within the context of your overall retirement plan. And then obviously considering the sentimental or emotional factors as well.
And we talked about that a lot of these rules of inheriting change if it's a non-spouse versus a spouse. And if you sell this within 2 years of your spouse's passing, that changes the game, right?
Yeah, that does change the game, because then you qualify, or could qualify, for that exemption, meaning $250,000 or $500,000 of otherwise capital gain that you don't have to pay taxes on. And if you're not living in that house for 2 out of the last 5 years, that exemption goes away.
Thanks for watching. If you like this clip, check out the full episode right here. We'd love to keep you in the loop. Hit subscribe to be connected with other pre-retirees just like you who are looking for engaging and entertaining retirement strategies.